Hello traders, we are recording this video today because a 24SP trader, 24SP trading material trader has asked me a question and also has sent me this chart to ask me a specific question about the chart. All right, so what is happening here? So I will say hello V because I don't want to mention the name of the trader. I'm recording this video for a trader that I call trader V because I do not want to call the name of the trader here, but I will be sending this video to that trader first and then I will share it also on YouTube. All right, so the first thing that you want to look for, trader V, if you allow me to call you that way, is to find, as you say, a high probability trading setup on a higher time frame using the 24SP trading material. The 24SP trading material is the trading material that reveals to traders the 13 specific stochastic pattern. This is what the trader is using here. All right. Now, what you are showing here, it looks to me more like stochastic divergence on the weekly chart as the price is going up. All right, so this is a normal stochastic diversion, but we have the 13 specific stochastic pattern, but this one is just a stochastic divergence here. Is a high probability trading setup. Why? Because the ultimate role of the stochastic is to pinpoint divergences, especially when we are using the stochastic 833. So there is nothing wrong with your trading setup. It's a bearish stochastic divergence. So this is your trading setup. Now you also have here the hourly time frame. All right, I don't know why you are using the hourly time frame, because the correct procedure I want to show you here is that when we have a high probability trading setup on the weekly chart using the 24SP trading material, once we use the 24SP trading material to find a high probability trading setup on a weekly chart or any higher time frame, the next step is just to implement a different time frame trading method. So because you have found your trading setup on the weekly chart, your signal time frame should be the 2-hour time frame or the 4-hour time frame. And you will be entering the trade on the 15-minute time frame. So the reason why, we have the 24SP trading material is that traders that are looking for high probability trading setup can go to the stochasticmarket.com and purchase the 24SP trading material, which is just highlighting high probability trading setup. But once one finds one high probability trading setup, one must now implement a top-down trading method. So the only thing that I will say to you here, your trading setup is a bearish divergence here. It's okay. You draw your trend line. Good. All right. I hope this candlestick bar here, the red one here, is closed because you want that candlestick bar to close here on the weekly chart. This one, it must close fast. All right. When that candlestick bar is closed, it means that we have that support level has been invalidated. It become now. Then we wait. Then you can switch to your signal time frame. So the weekly chart, the signal time frame is 2-hour time frame or 4-hour time frame. Personally, I prefer the 2-hour time frame. And then when we see the signal there, we will use the 15-minute time frame. So this is how you're going to use the 24SP trading material just to find high probability trading setup. And then the next step, you implement a different time frame trading method. All right. If you YouTube search our YouTube channel, the 24 Stock Trader YouTube channel, you click on the playlist, multiple time frame trading method, you will see videos about top-down trading method for weekly chart traders, top-down trading method for, or how to swing trade on a daily chart. You see different videos that are talking about multiple time frame trading method. If you are using the stochastic, which is good, it's good that you are using the weekly chart. So I want to have one example here because I don't have this stock. I don't have a data for your stock. All right, the power grid, I do not have a data for it, but I will show you one example here. Okay, so stay with me. So we are looking at okay, the Walt Disney stock. Similarly, you can see that we have the stochastic divergence here. You see here on a weekly chart. That's where I placed my red vertical line. So at that point in time, okay, we have, okay, so here, if you are more advanced trader, you can see that we have that, okay, hammer at the top here, because it opened here and got a long tail that pierced through it. For more advanced traders, after that hammer there, we can go to the 2-hour time frame looking for the signal. For traders that are not advanced, they have to wait until this common central line is broken and this candlestick bar is closed. Now, one more time, you can see that the candlestick bar that pierces through that common central line is long. So it makes it more difficult for new trade, because in that case you highlight the high. If the candlestick bar that breaks that common central line is very long, you highlight the high, the low, and the median line. And in normal condition, we will prefer the price to rally up to the median line. In this case, it did not. So it's more complex for new traders. But allow me to continue with my explanation. All right. Because I don't have the data for your stock. Now that I see this hammer here is indicating to me a weakness, because I have a bearish stochastic divergence. I will now go to the signal time frame, pay attention to the vertical line. I will go to the 2-hour time frame, and now we are looking for that red line. Here it is. So on the 2-hour time frame, you can see that the price was above this bullish trend line. You see here, this is the bullish trend line on the 2-hour time frame. So again, the signal on the 2-hour time frame can be break below that trend line and retest it, something like it, break below and retest it. That will constitute our signal on the 2-hour time frame. And then we go to the 15-minute time frame looking for similar scenario, break below, retest on the 15-minute time frame to enter the trade, and the price is going down. Here you see that the price went down after that bearish divergence. But if you look carefully on this chart, I don't know because whether you are advanced trader or new trader, okay, let's say that you are a new trader. You can see you want the first candlestick bar to close below that trend line. Again, as I was telling you on the weekly chart, on the 2-hour time frame, see, so the first candlestick bar that close below that trend line is this one here. If you place a vertical line on it, you see that is the candlestick bar that close below it. All right. The following candlestick bar, you can, if you look carefully, you see that he rallied up. He opened there, went down, but he went up also to retest that trend line there. So what you should have done if you were here, after the first candlestick bar closed below that trend line on the 2-hour time frame, which is the signal time frame, you will now go to the 15-minute time frame, watching that trend line, and you want again on the 15-minute time frame, already price to rally up to retest it. On that 2-hour time frame, it did happen. You can see that the following candlestick bar, this one, rally up to retest that trend line. You see, that's why it went up to retest it, and after that, it went down. If you think that that is too much for you, okay, you can be a little bit patient, all right? It breaks below it. Here, it didn't come back to retest it straight away. So normally, we will prefer it to break below like this, and then come back and retest it like this. That's normally what you should expect, all right? But it did not happen here. It makes it more complicated for new traders. If that is the case, as it was here, you wait for the next lower high. So this is the first high, and you wait for the next lower high, which is this one here. This is where you will enter the trade, which is not a very good place, because you want to sell it near that trend line. So you may hide your stop loss behind that trend line. But if you are not, if the price did not break below it and retest it here, okay, on a 2-hour time frame, then you have to wait until it rally up a bit, forming a new lower high, and okay, this common, you see, this common central line is kaput. You can see here, the price did that. You see what I was telling you now. Now it did it here. It break below it. We're all the way here, and then it came back to retest it on the 50-minute time frame. This is what we are looking for here, but it did not happen. So if you couldn't enter here, which, all right, if you are not new, you are not advanced trader, you may not handle this one carefully. And then first lower high, okay, rally up, common central line is kaput. Here the price was very nice, because sometimes he may not do that. So here he did it very nicely. He went down and came back to retest it here. Now you have a second signal apart from the one here, and now you quickly go to the 50. If I color this one in red, let's go to the 50-minute time frame. Hopefully we'll see it. Then you go to the 15-minute time frame, looking for a similar scenario, break below, retest again on the 50-minute time frame, because the entry is another signal on the signal time frame. All right. It's not easy, especially if you are a new trader and you want to start applying a top-down trading method. Practice, all right, until you master it. Another thing I need to say to you, now you ask if I can tell you to sell. I'm not allowed to do that, all right? I'm not allowed to tell traders whether they should sell or buy. I can't do that, okay? I can't tell you sell now. I'm not allowed to, all right? So I can't tell you, okay, with my permission sell, with my permission buy. I can't do that, okay? Can't do that. I'm not allowed to do that, okay? Here it is, because I'm not financial advisor to tell people to buy or to sell, okay? So now, suppose you were here, okay, now you will go to the 15-minute time frame. Is it there? We can't see it. All right, this is what a shame that we cannot see. But you get a message now. So on a weekly time frame, we are using the 24 SP trading material to find a trading setup. Once we see the trading setup, whether on a daily chart, weekly chart, monthly chart, quarterly chart, yearly chart, even on a 4-hour time frame, we must now use a different time frame trading method. So if you have the 24 SP trading material, the next thing that you should do is to learn to master the top-down trading method. All right, as I explained to you, if you go to 24 Stock Trader YouTube channel and you look for a playlist about multiple time frame trading method, you watch a lot of videos. Recently, I have also posted a video recently about top-down trading for yearly chart traders, top-down trading method for weekly chart traders. If you go to that channel, you will see it there. The video is there when I show traders how to apply top-down trading method on a weekly chart. So because I do not have the data for this power grid stock, the correct signal time frame for the hourly time frame, all right, for the weekly chart is the 2-hour time frame. Now you say that you are using Elliott Wave, all right. Now what I will say to you here, I don't want to talk about Elliott Wave here. Now, because this candlestick bar should close on the one I'm showing you here, should be closed on the weekly chart. Now, because you were on the hourly time frame like this, there was this double top. It's a bearish chart pattern. All right, this is good. All right. If I was here, I would prefer to sell here when I cannot draw on the chart. When the common center, you see the trend line here is kaput. That's where I would prefer to sell. So I can place my stop loss behind the Bollinger Band. That's what I would prefer. So when the common center, I see that double top, and that common center line is broken, I would prefer to sell, and then I hide my stop loss there, and then my risk will be low. Otherwise, now, if you are a new trader, you allow it to break below it. You see here, you break below it. You are counting your wave. I don't want to talk about it now. You could have entered the trade here when the price was, you see, 1, 2, 3, near that, moving average. All right, you see this move here, 1, 2, 3, near the moving average. You could sell it on the edge after it start coming down a bit. All right, then one candlestick bar on the hourly time frame is closed, and then you sell it and you play your stop loss a little bit up above the moving average, because professional will be selling behind the moving average gently. Now, Now that the price is already going down, I don't know where it is now, all right? So if you want to sell in a downtrend, let me go show you again. So suppose you want to stick to your hourly time frame, what will you be looking for? You will be looking for a bearish channel on the hourly time frame. That's how you're going to sell it. If you couldn't sell it before, so price going down, displaying lower lows, lower high on the hourly time frame. Form a low, all right, goes up again, all right, and then come back again, form a new lower low. So price form a lower high, and that lower high is followed by a new lower low. It's good. It's telling us that the bearish momentum is intact. Now you wait for it to come back to the top of that declining channel on the hourly time frame. And then from there, if you see it start finding a resistance there, you can sell it right there. But personally, I would prefer that you use weekly charts, 2-hour time frame, and 15-minute time frame. All right. So this is what traders have done here. Bearish divergence, stochastic. All right. 2-hour time frame, the signal was not easy. This one here, there was another one here, and then they go to the 15-minute time frame to enter the trade. All right. So suppose the red line is here, and you are the 15-minute time frame. What I was saying to you, you are now, the signal is fired, okay, on the 2-hour time frame. Now you switch to the 15-minute time frame. One more time, you are looking for something like this, perform a low, so there is a lower high, okay, followed by a lower low. All right. Now we want it to come near the high here. Here it did not. All right. But it finally came here, but we would prefer it to come to the edge like this. All right, and then we sell it gently. All right, and we let it roll it down. All right. So use the 2-4 SP trading material to find a high probability trading setup. Practice until you master the top-down trading method, and then apply the top-down trading method, okay, to enter the trade. The setup using the 2-4 SP trading material, the signal on the signal time frame, and the entry on the entry time frame. So the signal may be break below, retest. So either price break below, talking about bearish signal, price break below a bullish trend line, retest. Monitor the candlestick bar. The candlestick bar can help you enter the trade, find a signal at early stage. They are very good, all right? That's one example of a signal, or break below, retest, normal horizontal key level. That's another bearish signal. All right. Or price break below a rising channel. Below a rising channel. Either it retests in the edge or the median line of the channel. And then from there we take it down. There's one more example of a sell signal. We can look for bearish chart pattern. All right. Like you have seen it now on the hourly time frame. The reason why the price forming equal high here is a weakness. So you draw a horizontal line there and say prior to bearish signal below and prior to bearish signal below. So because you have a good reason to sell, now on the hourly time frame you are seeing a weakness here. As soon as this common settle is kaput, you sell it gently, place your stop loss above there. All right. I hope I have been useful in this tutorial to you. Like I said, use the 2-4 SP trading material to find high probability trading setup, because the source of the trading, for a trading to become a profitable trade, the foundation of the trade is the trading setup. All right. So once we find a trading setup, now we must implement a top-down trading method. So I highly recommend that you watch the videos about the top-down trading method. You practice first, don't go live. All right. Practice until you master it, and then go live. All right. Happy trading to you all, and speak to you soon. Thank you, Trader V. I hope, all right, you do not mind me calling you Trader V, because I don't want to reveal your name to other traders. I'll be posting this video at the George Trio YouTube channel. Thank you for watching, and speak to you soon. We are the TSTW24 traders, talking about the stochastic pattern. A trader has asked a question.